Hi, my name is Dave Lundgren, and I'm the CEO of Cashflow Properties. I'm excited to welcome you to this webinar about how to avoid the volatility of the stock market and crash-proof your retirement by investing in turnkey, high cash flowing rental properties. Today, you're going to learn how you can create wealth like the top 1% and also have a safe, secure retirement regardless of the volatility in the stock market. Hi, who am I and why should you listen to me? There's a lot of stats here on this page or this slide, and I don't mean to impress you, but more impress upon you the fact that I've been around for about 20 years. I actually started as an Army chaplain 20 years ago, left the military, and got into real estate investing, and have done hundreds and hundreds of deals personally. And with my partners and I, we've done thousands and thousands of deals and helped dozens and dozens of our clients invest in real estate and do it passively. So I just want you to understand that I've been around the block and done a few things. Folks, there's a problem, okay? Here in America, in one of the wealthiest countries that's ever existed, where there's more opportunity, at the age of 65 years old, most people, you can see here, either 30%, 36% are dead, 54% are dependent on others, 5% are still working, and a very small percentage, only 5%, are actually getting ahead or where they want to be financially. Most of you know that the majority of folks say that the number one stress they have in their lives is financial concern. 76% of Americans say that, according to a recent study. Okay, what do you think is the difference between the top 1% and everybody else? Do you think that they have access to information that you don't? Do you think that they're able to create income in a different way than the average person? That they're maybe not trading time for money? And what can you do to change that and become one of the 5%? That's what I want to talk to you about, and that's what I'm passionate about and have been for the last 20 years. Are you concerned about retirement? A lot of folks you talk to today are concerned about retirement, okay? And here's the reality. Life isn't just about money. And so we're going to talk about money and how to secure a safe, solid retirement. But what it's really about is time and memories and spending your time with loved ones, because that's really what's most important. Vacations, memories. Money is just a vehicle to be able to do that and buy back some of that time. But the truth is most folks aren't able to live the lifestyle they want. And why is that? Well, here's the challenge I will say is the traditional solution is that most people are putting their money in stock markets, 401ks, and mutual funds. Okay? And think about that. If you heavily invested in the market, then you're familiar with the roller coaster ride that you've got to endure. Okay? As you look at this, June of 1929, we had a huge crash that we call the Great Depression. Okay? And it took 30 years to recover from that. Okay? Then there's another crash, 1966. Took another 30 years to recover from that. And then 1999 to 2013, there was only a 14-year span there. Okay? But here's the reality. There's a roller coaster, as we've all noticed, with the bear and bull markets in the stock market. It's up, it's down, it's volatile, and that's the challenge. Is most people have their money in the stock market and are not paying attention to it, and that's why these bull and busts and the volatility in the market hurts them. Okay, here's a 15 to 10-year snapshot. 2001, 2009, we had a couple more crashes. Okay, so let me ask you this. Stats show that the average bear run is 5 years. We're 10 years in to this last bear run. Do you think there's going to be possibly another correction? What do you think is going to happen? And people say, okay, well, I lose a little bit of money in the market. I get a little bit of money. I just ride it out. And over time, I hear the stat 7%. People ought to throw out 7%. The truth is there was just a study done. The average net that somebody gets out of mutual funds or 401k, if they just leave their money in the market over time, after fees and everything, is actually 3.7%. You think, how's that even possible? It's because the reality is when you lose half of your retirement, like 2008, 2009, when the market crashed, look at what happens. People think, okay, I have a 50% loss. That's all right. I'll just get a 50% gain and get the money back. But the truth is, look at this. If you had $100, you lost 50%. If you get a 50% gain, you only back to $75. You have to get a 100% gain just to get back to even. That's why when the stock market has volatility and crashes and drops in half, it kills people. Okay, it takes so long to recover from that. The 2000s they call actually the lost decade. Okay. And so a lot of people look to financial experts. Let's look at Warren Buffett, right? The Oracle of Omaha. Everybody looked at him as the stock market guru. Let's listen to what Warren Buffett had to say about the stock market and about other assets you can invest into outside of the stock market.
Dr. Warren, when you say, with your comments about bonds, that makes me think of financial assets in general, which includes stocks. And I think about the printing presses, not only in this country, but around the world. You've seen the commercial cha-chung, cha-chung, cha-chung with the central banks. And there are periods where financial assets are great, from the early 80s to 2000. And I just wonder if there's then periods where hard assets are great. And you see Paulson in gold and some of these other guys in gold or commodities. Are you just not comfortable with commodities? Are there times where you should be downplaying maybe stocks or businesses and going totally full bore into commodities, but you're just not comfortable doing that?
No, the alternative with me, Joe, the alternative, I don't like fixed dollar investments at all. I don't like short-term bonds. I don't like long-term bonds. We own a lot of short-term bonds, but that is not because we like them. That's just a parking place. But the alternative, in my view, I mean, certainly commodities can be an alternative, but the alternative is income-producing assets of one sort or another that are not fixed dollar type investments. And so I've said consistently for the last few years, I would vastly prefer to own common stocks than fixed dollar investments over a 5 or 10 year period. I don't know about the next 5 hours or 5 days. And that might very well extend to rental real estate. It might extend to farms. I mean, an investment, you're looking for something where you put out money now and that asset that you buy gives you back more money over time. Now, the problem with commodities is that you're betting on what somebody else will pay for them in 6 months. The commodity itself isn't going to do anything for you. So there's two types of assets to buy. One is where the asset itself delivers a return to you, such as rental property, stocks, a farm. And then there's assets that you buy where you hope somebody else pays you more later on, but the asset itself doesn't produce anything. And those are two different games. I regard the second game as speculation. Now, there's nothing immoral or illegal or fattening about speculation, but it is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. I bought a farm 30 years ago, not far from here. I've never had a quote on it since. What I do is I look at what it produces every year, and it produces a very satisfactory amount relative to what I paid for it.
So there you have it. Warren Buffett, the Oracle of Omaha. People look to him as a Wall Street guru. What was he talking about? That he said, I prefer income-producing assets. So specifically, he mentioned farmland, dividend-paying stocks, and rental real estate, because there's income coming in off of that, regardless of the price of that farmland or the rental real estate. There's cash flow coming in no matter what's happening in the stock market. And we'll get into a little more details about why Warren Buffett himself is recommending real estate, rental real estate, when it's done the right way, when you can have somebody else manage that for you. And what he's ultimately talking about here is a return on your time, right? There's only so many hours in a day. If you work a 40-hour work week, or you go out and bust your hump and work 60 hours, that's all, and you're trading $1 for an hour, that's all you have. And you can see here, if you have passive income that's coming in 24/7, regardless of what's happening in the market, regardless of your own time, now you can get a solid return. Now you can start to get ahead, okay? So there's active income and there's passive income, right? Active income that comes off of wages, salaries, it's taxed at the highest possible rate, and you're trading your time for that. Passive income is when your money's working for you. And real estate's obviously an example of that, as Warren Buffett talked about, okay? So again, looking at it a different way, you can sit in a cubicle, active, where most people are at 95%. The 5% are making their money in passive. The top percentage of folks are able to do that through passive income. So that's what we'd suggest you through what we call turnkey real estate investing, okay? And when we say turnkey, radically different than active real estate, which we'll talk about. There's a difference between passive real estate and active real estate. But quickly looking at the stock market versus real estate, right? In the stock market, your investment can go up and down with the market, right? Fluctuates wildly. You can potentially lose everything. Real estate, Even if a house burns down, you got insurance on it. A house is never going to go to zero, right? The returns can be volatile in the stock market, and typically you're getting one return for that dollar. You invest in a dollar, you wait for that stock to go up. Within real estate, you can see that there's actually 4 potential returns that we'll talk about. So you invest $1, and there's actually 4 different returns you can get for that, backed by real estate, solid, steady type of return, much different. So what do we mean by turnkey real estate or done for you? Radically different than active. What I would say active real estate is what you see on these reality shows, which I've been behind the scenes on those. Those aren't real. Okay? A lot of actors involved in that. But they're out there swinging a hammer. So we'll never suggest you go out and swing a hammer. We're not going to try and sell you a book and tape or coaching here. What we're talking about is done for you real estate. So our teams doing the real estate. We place tenants. We manage that asset for you. So just like you buy a stock and you're trusting the CEO and the board of that company to manage that company well and get your return on that stock, same thing here. Deploy your money into an asset, into real estate that's done for you. We do everything for you. So we call it turnkey or done for you real estate that's managed for you. Could be a single family home like you see there, could be apartments, could be self-storage. You could even be a lender, meaning you could act like the bank to us and get a passive return on your money as well. So that could be an aspect of done for you or turnkey real estate. Okay, and when I say 4 returns for every dollar you potentially invest, here's some real numbers. And we're going to go into some actual examples and show you actual properties, but let me break down for you. Here's an average house in the Midwest. You can see $150,000 price on that house. If you use leverage, which is very powerful, you walk in and imagine walking into a bank and saying, hey, Mr. or Mrs. Banker, I want $120,000 to buy a stock. What do you think they're going to say? They're going to laugh you out of there. But with real estate, when it's done right and with the way we do it, you can walk into a bank, and if you have good credit and a decent amount of money, they'll give you 80% of their money, and you only have to use 20%. So this $30,000 out-of-pocket cash is what you would be out of pocket and leverage the bank's $120,000. Okay, and you can see here the cash-on-cash return. You put a renter in there that's renting out for $1,200 a month. You get a 10% cash-on-cash return, meaning for every dollar that comes in, you're comparing that to the $30,000 out of pocket that you have, your own money. Principal pay down means there's a loan on that, but your tenants, somebody else is actually paying that principal down, which in this scenario gives you 5.8%. Tax breaks, we'll talk a little bit more about that in detail, but passive income is taxed at a radically different rate, which is how healthy people or wealthy people get ahead. Okay, so I'm not a CPA, I'm not a tax attorney, and I'm not going to give you tax advice, but the reality is the average person in America, if you look at local, state taxes and everything all in, they're paying 50% or more of their income when they're W-2 active employee for somebody else. Versus passive real estate, you can have significant tax breaks. So you can see in this scenario, 3.6%, and then appreciation, meaning the value of that home when you're doing it in the right markets, which I'll explain that we're in, over time in these linear markets, they're steady eddy, 5 to 10% year over year. They're not wild fluctuations like you see in the coast, in California or Florida. We're talking linear markets that we've been in for decades that have a nice steady appreciation over time. And so if that asset only goes up 5%, right, you get the total return on the 5% of the 150,000. Well, that's a 25% return on your $30,000. And that's where you can get 15, 20, 25, 40% or more total return when you look at all 4 of those returns as compared to just getting one return in the stock market, which again averages 3.7% according to a recent study. So think about it. Your ROI, if you're like the 95%, you're only getting 3.7%, how can you possibly get ahead? Especially when you have to deal with the fluctuations and the volatility versus the 1% that are out there getting 20, 30, 40% or more. Now, I gave you just an illustration. There's no guarantee you're going to make 40% total ROI, but we will show you and walk you through actual properties and dozens and dozens and dozens of clients we've worked with that are getting significant double-digit returns consistently by using real estate as a vehicle to create safe, solid, and secure returns. You can see with the Bloomberg article that said the average net ROI is 3.7. So now you're probably saying, okay, I'm ready to create wealth like the 1%, Dave, but how can cash flow property help me? Well, here's an individual. I want you to hear her story on what we're able to do with her. Then I'll explain exactly what we do to bring people into our market, see the assets, and invest in actual properties.
I've been in real estate for about 15 years, buying and selling with my husband, real estate agent for 3 years, and I think the thing that I like so much about the Kansas City market is that you have great neighborhoods, and the houses are really good. You have low entry as far as your investment, but then you have a high cash flow, and I think a lot of that has to do with the neighborhoods and school districts.
So there you go. Somebody who came into the market, met with us and our team. And so here's our promise to you. We're going to do something unlike anything else that's out there. There's a lot of companies that do the shotgun approach where they're in dozens of markets and have a very shallow relationship, but they actually haven't vetted out those markets. They don't live in those markets. They haven't done thousands of deals. It's just a lead generation machine, if you will, again, across dozens and dozens of markets, and they're not really sure what's going on. And instead, our promise to you is we're going to go deep into 1 or 2 markets that are the best markets that we've been in for decades and decades, and actually walk you through the process. And what we have is a system, right? Just like you see this McDonald's sign, right? It's like an amazing franchise. And what does system really stand for? It stands for save yourself time, energy, and money, okay? Save yourself time, energy, and money. That's what we do. We have a system. It's not a franchise, but we're literally going to walk you through and show you exactly what we do in these markets. Our teams, our processes done for you. Your money with our experience. It's a system. Because ultimately what we're talking about is freedom. And real estate leads to freedom when it's done the right way. Not you out swinging a hammer, not us selling you a coaching program. You go out and try and figure this thing out on your own with a coach and be active. What we're talking about is passive real estate to create freedom. Because we know the challenges to get started. In the last 20 years, I've talked to thousands of folks about financial freedom in real estate, and we already know what the obstacles are. Time, knowledge, or money. So we're going to use your money and our experience and our time to get you the results that you want. And so what is different about our system? I'll get to explain in more detail, but basically we do what we call an investing tour. This isn't an approach, a shotgun approach, and getting you into dozens of different markets. We're talking about going deep in 1 or 2 markets, because ultimately it's about your time and saving yourself the time so you can have the lifestyle you want, so you can have the retirement you want, and you don't have to go out there and be active in the markets, because we're doing that for you to be able to save ultimately what's the most important thing, which is your money and being in the right markets. So we're talking about markets that have, at a macro level, amazing economies that are steady and what we call linear markets. They don't have wild fluctuations that go up 25% when the market fluctuates, because you can't be on those markets. So we're going to walk you through specifically on buying tours where you come into our market and gain from our experience. Okay, so you'll see a link below. Click on that link and we'll walk you through what we call a buying tour, an investing tour where we bring you into the market, we walk you through this, and you literally experience with our team side by side how we make this investing happen. Actually buying assets, not investing in a coaching, not investing in a training, not going out there and be active, but seeing our processes and see how that works. In fact, here's a quick video clip. You can see some of how this works. So again, what's different about this system is we're not going to sell you thousands of dollars in coaching and training. We're not going to tell you to go out there and be like you see on the reality shows. What we're saying is we'll bring you into town, put you on a bus, meet with us face to face, meet our team, see our processes, see how we place tenants, see why we have less than 5% vacancy, see why we have less than 5% historically maintenance-wise, see why the markets that we're bringing into are the best markets and have historically been the best markets for decades, and what the economy is doing in these markets when there is a downturn. Because again, our concern is what happens with the next stock market downturn. And you'll be able to be with other folks, actually see assets, actually invest in them, whether they be a single family home, whether they be a self-storage unit, commercial projects. We're going to see the assets. You're going to get a chance to meet our team and see the markets and exactly what we do in each one of these markets. So click on that link below, talk to myself or talk to one of my advisors, and we'll talk to you about what we call an investing tour, where you literally come to the market, break bread with us, meet face to face for a couple days. We'll train and educate you, But ultimately, we're buying assets. We're not selling coaching and training and teach you how to be active. We're talking about passively investing in real estate. Okay? Here's an example of some of the houses you'll see. Our average price point is around that $150,000. We have some that are higher, some that are lower, but you'll be able to see the good cash-on-cash returns, and we'll walk you through specifically our processes. Okay, here's another couple and their experience.
Surrounded by him has been fantastic.
They were able to provide us all kinds of options at our price point and able to find us something quickly in a market that is growing.
So there you go, a market that's growing, because that's ultimately what it's about. You can see here some other testimonials. Folks that are in markets that fluctuate. Maybe you're in a market like California or on the East Coast where prices have been historically high right now. We'll take a little money off the table or do what we call a 1031 exchange, where you can roll your money tax-free into some investment, or maybe tap into that equity through a line of credit. But a lot of folks don't understand even we can use your 401k, your IRA money, and get out of a market that's been a wildly fluctuating market and get in a steady, safe markets and deal with off-market products, okay? Meaning properties that the public doesn't have, properties that you don't see on the MLS, properties that are off-market exclusive to you, okay? So who is this not for? Because a lot of folks say, oh my gosh, that sounds amazing. Well, it's not for somebody who doesn't have the money to put down into an investment, right? It costs money to come on the investing tour with us. It costs money to own a piece of property. Now, we can show you funds you might not be aware of. Again, self-directed monies, maybe equity in your house, maybe you can get a partner. But the reality is it costs money to own real estate and hold it passively. This is not a no money down course. This isn't coaching and training. This isn't you being active. This is using your money to deploy it passively and let us manage your money. And it's for somebody who doesn't want to be active. Somebody who, just like when you buy a stock, you don't go into the boardroom with that CEO and ask them to manage the company. Same thing here. We want somebody that wants to deploy your resources, your money, and let us manage that for you and get you a steady, solid return. Not somebody that wants to micromanage the process. So who is it for? It is for somebody who wants to fast track their success. It's somebody who doesn't have the experience, who doesn't have the time, but still wants the safe, solid, secure benefits of being a real estate investor without having to have the blood, sweat, and tears. Because property management is crucial. Okay, one of the important things is we're going to manage that asset for you. We're going to place the tenant. We're rehabbing the property. All those things are in place. Thousands of deals we've done in the last 20 years, hundreds of assets under management at any given time that are performing very well. Okay, we'll also teach you how to pay your mortgage off quickly. Most people think it takes 30 years to pay off a mortgage, but we'll show you how to take the excess cash flow, if you have debt on that, and pay that debt down 3, 5, 7 years sometimes, so you can create generational wealth. It's not just about making money in cash flow today, it's about passing that on. Okay, and that's where tax savings can come in. Again, I'm not a CPA, I'm not a tax attorney, but the facts are passive income is taxed at a radically different rate. And instead of paying 40, 50% or more of the income coming in, what if we could dramatically reduce your tax savings, so not only increase your income and increase the ROI, but save yourself on taxes and also protect your assets. We'll have professionals, attorneys, and CPAs walk you through how to protect these assets so you can pass them down. And I have people say to me all the time that are more mature, 50, 60, 70 years old, that say, man, I wish I would have bought a property 30 years ago, and I never did. What if all you did was buy one property that you held on to for 20, 30 years and were able to pass that down? There's an old saying that says, the best time to plant a tree is 20 years ago. Well, the second best time is today. And that's all we're saying. What if all you did was invest in one property or two properties, held on to that, and watch the returns over time? You could be our next success story. Because there's always a bigger reason. And what I mean by that, it's not just about money, but it's about the freedom to spend time with your family, go on vacations, donate to churches and charities of your choice. Whatever you choose to do with your time and money freedom, that's ultimately what it's about. So again, click on the link below. You can talk to me or one of my staff members about coming out on one of these investing tours, where again, we'll literally meet with us face to face, see our processes, break some bread with us, get on the bus, go out, see these assets, and deploy your money into actual real estate. Not coaching, not go out there and teach you how to be active and swing a hammer, but invest alongside of us the assets that my partners and I, we literally own tens and millions of dollars of assets of our own. We've gone through thousands of deals collectively over the last 20 years. See what we do. See the investments we make. See our properties and invest your dollars into the same assets that we do and have done historically to get yourself a safe, solid, secure retirement. So God bless you. I appreciate your time. Click on the link below, reach out to my team, and let us help you create a better future for yourself.